Hi, I'm Kyle Leary, grain marketer at Crystal Valley. It's Thursday, February 10th, and I'm going to give a quick update on what's going on in these corn and bean markets. So extremely volatile day today. Had a 24-cent trading range in corn. March corn ended up closing down 5, but we did put in new contract highs today for both corn, or both old and new crop. New crop futures got close to that $6 mark, but ended up backing off later in the day, closed at 5.83 3/4. Beans, an extremely wild day, had a 68-cent trading range, and they ended up closing down 20 today. But we did have new contract highs for both old and new crop as well. Nove 22 closed at 14.32, but we did get above $14 cash for October delivery at all locations today. So had a lot of orders hit at that $14 mark and bought a lot of beans there. The big thing driving the market lately has been South America production. We've seen a drought in southern Brazil and Argentina that's really started to have an impact on their yields and production down there. We saw the USDA cut Brazil's bean production again yesterday, down to 134 million metric tons. That's down 10 million metric tons from their original estimate back in November. We also saw CONAB today cut their production estimate 15 million metric tons down to 125 million. CONAB is like the USDA of Brazil. So that 15 million metric ton, that's a massive cut. That's like losing the whole state of Iowa's bean production. So a pretty big number there. The market seems to think that 125, it seems like we're trading that number a little bit more than the USDA's number 134. So a lot of people are thinking we'll see the USDA continue to stair-step their production estimate down a little closer to that 125 number. We've also seen Argentina have some cuts in production. They've lost about 4 million metric tons over the past few months, and the USDA is sitting at 45 million metric tons for their crop. So with these cuts in production, we've seen China switch some buying from South America back to the US, which is really good to see this time of year when Brazil is usually the market. We've had the USDA's announced flash sales to China or unknown every day so far this week, so we'll see if those continue to support the market. Brazil is getting going on harvesting in northern Brazil right now. They're off to a great start, which actually has a bigger impact on the corn market as they'll continue to plant or start planting right away their safrinha crop or their second crop corn. And that could help have more acres as they have more time to plant, and it'll also allow that corn to be start pollinating before their dry time of year. That's what we saw happen last year. They got planted really late, and then it was pollinating during a drought, which we all know it doesn't work very good. So the next 2 to 3 months will be really important for Brazil's corn crop, as that safrinha crop makes up about 75% of their total corn production. So moving on, some other things to keep an eye on are also political tensions. We've seen Russia and Ukraine in the news a lot. We've added some premium to that in the corn market, but if we did see military action over there, I think that would have a lot bigger impact on the market, as Ukraine is the number 4 exporter of corn and Russia is the number 1 exporter of wheat. So if we saw sanctions and things like that put on Russia, we'd have to find a way to replace that feed wheat with corn from the U.S., and same thing with Ukraine corn exports. The other one that isn't in the news quite as much is China and Taiwan. If we saw something happen there, that would have a very negative impact on the bean market. As we all know, China is our number 1 customer of beans, and if we started putting sanctions and stuff on them, that would not be good for the bean market. The other thing that we've seen is the funds have really came in as a big player, especially in corn. Right now the funds are long 372,000 contracts. That was as of last Tuesday. So anytime you get that over 300,000 contracts, that's something that we keep an eye on when they get that that big a position built. As they exit, they could really drive the market down in a hurry. The other one is the index funds have come in just as a hedge against inflation. We've heard inflation a lot in the news lately, and so they're just coming into commodities to try and protect some of that. Beans, the funds are long about 154,000 contracts as of last Tuesday, so not quite as big a position as corn. Beans, anytime we get over 200,000, we start to take a little closer look at that. But that is always delayed, so we'll get a new commitment of traders report on Friday, and that'll be as of this Tuesday. Moving forward, something that will obviously have a big impact on the markets this spring is the acreage battle. With high-priced inputs, let alone even the availability of getting inputs, there's a lot of people talking about more bean acres versus corn, etc. Right now, that corn to bean ratio is sitting at 2.45. Usually we say anything above 2.5 favors bean acres, but with these high-priced inputs, people are thinking maybe that number is more like 2.4. So if we'll see some acres start to switch, but in reality, it's your fringe acres in the Dakotas and places like that where they're going to go from planting wheat or other small grains and plant corn or beans instead. So we'll have the USDA Outlook Forum coming up on February 24th and 25th, and that'll give us an acreage update. And then the big one will be the March planting intentions at the end of March. So we've got a lot of things going on in the market. We've also got crop insurance pricing going on right now in February. Luckily, we've rallied going into this and have some very nice levels going on right now as we're about a third done with that. So we're at some levels that we certainly want to protect moving forward. So if you do have any questions or want to get something on the books, feel free to reach out and just let us know. Thank you.